The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Happy New Year. Bobby Rains here for our, uh, let's say, regular at this point. I feel like our schedule's been a little off. Normally once every 3 weeks, members-only workshop. Let's get right into it. We're going to do our usual agenda this week. All right, and talk about what's going on in Investors Observer, a little market update, and then member-driven content, questions, site demonstrations, etc. As always, I can prepare slides for questions that get submitted ahead of time. Just mention workshop. You can reply to that invitation when it goes out. That's what a lot of people do. That's a pretty handy way for me to keep track of them. Anyway, yeah. So if you have questions at any point, whether you came preloaded with questions or have questions as I'm talking, just put them in the question box there, and I will get to them either in the moment or at the end. All right. 2 years of one-day candles on the S&P. Yeah, we're at all-time highs again. We kind of have been for a while. This next slide, this next slide is 6 months. You can see here after a period of, sort of, we'll call this relative calm, although there were some disruptions in there. We're back to some big overnight gaps and some awfully long candles there. Obviously, that's related to the news of the day much more than it is related to anything technical. But that is, we'll be talking about that a little bit on the next slide. All right, so what else is going on besides the chart? Iran is the big one. Tensions seem to be easing for now, although that slide into the close that I didn't manage to capture in my chart seemed to be sparked by a headline about rockets landing in the green zone in Baghdad. That's not apparently a super uncommon occurrence, but everybody's paying a lot of attention to things like that right now, so the market is going to react a little bit more than it normally would. Oil obviously is sliding for now after the big jump last week. It could go back up if there's anything that looks like an actual supply constraint. We talked about this a little bit in the market week ahead post Monday afternoon, but there is potentially a sort of corner case where the tensions with Iran sort of ease, but Iraq decides they don't want troops there anymore. The president has promised to put sanctions on Iraq. If they do that, the thing that he would most likely sanction is their oil exports or some limits on dollar transactions by companies doing business in Iraq. Either way, that would likely count as a supply constraint for the oil market. So that would be kind of interesting if we saw, an ease in tension and then also some other supply constrained oil. That would probably be not so great. The other part of that is, yes, the U.S. does produce a lot of oil right now, but the oil market is global, so taking a lot of production offline or taking a lot of supply out of the market at some point is still going to be higher. So even though Iraq sells a lot of oil to Asia, if that supply gets shut down, the price of oil globally gets higher. And so it would still affect us here in the U.S. It may not lead to actual supply shortages, but the price would definitely still go up. On trade, the phase one deal with China should be signed next week. The 15th is when that's supposed to happen. We still don't really know what is in it outside of some tariff relief. The tariff relief obviously helps. Agricultural purchases on top of that will be welcome. But the thing about that, and the thing to look at as we start talking about phase two, which hopefully comes after phase one, is if we'll actually sort of move the ball forward. So the phase one deal seems to largely sort of do some work in terms of moving the trade situation back toward where it was before the trade war started. All the tariffs and all the Chinese limits on agricultural exports came right as part of the trade war. So all phase one does basically is get us back closer to the sort of pre-trade war status quo. Phase two may do some of that. Obviously, tariff relief and more agricultural purchases, whatever other things they can do there would help. But in terms of the actual big issues that people have talked about in terms of intellectual property protections and things like that, none of that has really been reached yet, and we'll see what happens there. On the Fed, they seem pretty content to sit on their hands until the data makes them do something in one direction or the other. That's probably fine. I feel like if there's equal arguments for raising as and cutting, maybe it means you're at neutral. So yeah, I think that seems to be fine. As of now, the economic data is still relatively stable. Lennar, I think it was Lennar, one of the home builders, I think it was Lennar, reported today. Three of the biggest ones report this week. And yeah, they said things are good. If you look at some other housing stats, it really seems like the issue there is supply constraints. So you would expect that new home builders would probably be doing well. And so you may see some sort of, it looks like softness in the housing market, but really it's just an issue of there are more buyers than sellers. And so, yeah, it's hard to get a deal done if no one is selling. And then Brexit, yes, something is definitely happening at the end of this month. I don't think it's going to be a hard Brexit. We'll see exactly what it works out to be. But it doesn't seem like it's going to be the most catastrophic possible outcome in any case. All right, that is the market wrap up. Yeah, we didn't get a lot of questions submitted ahead of time. I got a question from Mark about something about weeklies in the option screener, but I wasn't sure exactly what he was looking for. I'll get through some of these other questions and demonstrate the option screener. Mark, if you're here and want to put a little more detail about that question in the question box here now, I'd be happy to go over that. All right, so some questions. Douglas wanted to know, is this geared for beginner, intermediate, or advanced traders? Douglas, you also mentioned you're new. I'm not sure if that means the website or this webinar in particular. I would say both are geared for whoever is interested. We have, a stock product that we have tried to make accessible to the beginning investor. We also have some some relatively complex option products. And this webinar, I do a little talk about the market. There really just wasn't much to say today. Sometimes that part goes longer. And then the rest of it is questions. And yeah, we get questions about how to use the website. And then, the last one we did, which was back in December, we spent a good chunk of time talking about option pricing models. So really, I would say the webinar and the workshops both are really sort of geared toward investors of all stripes. So we try to have something for everybody in there in any case. All right, and next he says, are trades determined by some algorithm, committee, or individual within your organization? So Douglas, it depends on the trade. We sort of have a group of analysts here that have worked on developing things over the years, and so to start at the base level, the stock scores, our proprietary stock scores. Let me pull up the website here to show you what I'm talking about exactly. Yeah, so these are all proprietary metrics that we've developed. Those are, on a daily basis, updated by algorithm, and we have tweaked them a little bit here and there, sort of based on what we're seeing and what our analysts do. We're not tweaking them to respond to the market, but we're tweaking them in terms of like, oh, well, what if we added this? Would that make it better? Kind of a thing. So we're doing a little bit of that. If you're, I don't know what you're subscribed to exactly, but if you're in the options, if you're subscribed to the option products, all of the stuff in the option trade screener, those are picked by algorithm, right? I don't have the time personally or the staff to pick 1,300 bullish vertical spreads every morning, as an example. But again, that algorithm incorporates the stock score report. We have tweaked the algorithm as years have gone by. The introduction of weekly options and growing popularity of that several years ago has been a big deal. Getting rid of trading commissions has actually been a big deal. We're thinking about ways that we can improve our algorithms for how people would trade without not having a 15, 10, or more recently $5 or $6 per transaction cost. Certainly changes the way people want to use a tool like this, and so we've talked about changing that. And then some of the other stuff you get, investors keyhole trades during the day, trades in the options portfolios. Those are picked by our analysts. Sometimes one guy finds a thing and he likes it, but we usually have some back and forth about things. The investors keyhole trades in particular, there's a lot of them, and the constraints in terms of how we pick those are pretty specific. Like unusual options activity or insider trading. Usually there's only sort of one or two trades to pick from there a lot of days. And so the trades you get is the trade there is. Whereas in the portfolios, it's a lot more. We try to be a lot more deliberate and consider things. And usually there's a little bit more back and forth on some of those. All right. All right, so Stephen asks, could we discuss managing option rollovers? When or how to assess if it makes sense, either at the same price or in the money? We got two of those. Okay. David has a similar question. So this is a thing you would do in like a covered call or a diagonal spread. And basically what you're going to do is, right, because both of those strategies work on, functionally what we're trying to do is sell time premium or extrinsic value, and then it runs off as we get closer to expiration. So ideally what happens there is you sell an option for a lot of money, and then you can, if you want to use this rolling strategy, you buy it back for less and you can sell a new one. A lot of times you can do that, especially if you're keeping the strike price the same, you can do that for a net credit at the time. Typically, I'm pretty happy just to let things expire or be assigned. If I'm underwater on a position, I will roll it in that case. Something like that. One of the things we've done here some number of times is roll things. We try not to keep positions open during earnings, right? If you have a hedge position where you're capped to the upside, you don't really want to carry something through a potential source of volatility like earnings, because you're capped to the upside and you have a lot of downside risk there. So what we'll do sometimes is, if we have to roll it past earnings, we'll roll it past earnings and use some or all of the credit we got for the roll there to buy a put, and sort of collar the position up that way to protect us against earnings. And what we do most of the time in that case is buy like the next expiring put after earnings, but a call that goes maybe a couple weeks after that. And that's because the put is insurance against the thing that we know the date of. Right? I mean, if you could buy car insurance by the day, you probably wouldn't buy insurance for days you're not going to drive, right? That's basically the strategy for what we're doing with that put on the earnings. But the call is income, so we're happy to push that out a little bit further and take that money back. But yeah, in terms of just having a covered call, I know people do it. And again, this is a thing where now that transaction costs are less, it may make more sense. as I've said a couple of times, we're still kind of wrapping our heads around that. It never really made sense to me to pay $10 to buy an option back when I could just wait a week and then not pay $10 to buy it back. But now that those costs have gone to virtually zero, it probably makes more sense to roll some of those options a little bit more often. In the case of like when the stock has come up and your option is in the money, that one can be a little bit weird. And the thing to keep track of is, right, because if you want to roll it to raise the strike price, it's harder to do that for a credit because you're selling you're buying back an option that has some intrinsic value usually, so it ends up being more expensive, and then selling one that's out of the money, so it's worth less. Obviously, if you can do it for neutral and raise the strike price, that's great. If you can do it for credit and raise the strike price, that's even better. But in terms of the actual setup of your trade, if what you can do is raise it for a debit that is less than the change in strike prices, so if you roll an option for $1.50 and raise the strike price by $2, what you've done is put $1.50 into the trade, but raise the target profit by $2. So you're, sort of in some way of speaking, coming out 50 cents ahead there. So that's another thing to sort of keep track of when you are, when you're thinking about rolling for covered calls and diagonal spreads. All right, yeah, it says, where's the investor's keyhole on the new website? So if you go to options and just on the options dashboard, you can find the investor's keyhole trades all listed out right there. They also all show up, if you went to the stock page for Amazon, this will show up on the page there. That's not a particularly interesting or efficient way to try to find things, but yeah, you can get it just by going to investor's keyhole like that. We do still send them by email. Let me make a note. I will check your account and make sure you have your preferences set, or actually, I'll tell you what, let's just talk about how to do that. If you go to my account and go to message settings, you can set your message settings for individual investors keyhole alerts. If you don't want to get the upgrades and downgrades, you can not get that one and get all the rest of them. So that's still there. If you check your account and it has them all checked, let us know, and I'll look into maybe why you're not getting those. All right, Mahesh has a question about, he says, for swing traders, how can we set an alert? Yeah, we don't currently have any sort of alerts, customizable alerts. It's something we've talked about doing in the future, but we're not quite there yet. We have some list of things we're talking about adding in the future, and that is on the list, but we're not at a point yet where we're ready to launch it or even discuss a date for when we would push that out. All right, more questions. Oh yeah, there was. Let's talk about weekly options before we get while people are thinking of other questions. All right, so if I go to the option screener, I pick, say, covered calls. Right now, under expiration, you can set a minimum number of days or a maximum number of days. Let's do. So weekly options technically are basically any option that's not a monthly or quarterly option. Monthly options expire on the third Friday, so that would be your, say, February 21, March 20, April 17th. Quarterlies expire on the last day of the quarter, March 31. There's probably a June 30. Yeah, things like that. Now, weeklies are, and not every stock, some of the smaller ones in particular, will not have either weeklies or the quarterlies available. Quarterlies may only be on ETFs. I think they've kind of fallen out of favor a little bit. In any case, yeah, we now have expirations all the time, and there's even some, this 2-day gap here. My guess the 15th is going to be, nope. Yeah, so our list of expirations doesn't necessarily line up with when we have trades expiring. It's just when the available expirations are. In any case, there are some like Monday and I think also Wednesday expirations for stuff like SPY and some of the indices. So you can trade those all week if you want. So the one I think maybe what the question was going to be is how to find super short trades. And the answer is right now about the shortest trade you're going to find is going to be about 7 or 8 days. So like on Fridays, you'll find trades that expire the next Friday. But then we're not doing anything shorter than that. And again, that's the thing where we're considering how to tweak the algorithm to account for the lack of trading commissions. Frankly, it didn't make a lot of sense to pay $10 a week to trade options that were worth a quarter. But now that you're not paying $10, it may make a lot more sense to trade those quarter options, especially if it's going to be a quarter every week versus 50 cents for 3 weeks kind of a thing. That we may add that in the future. We're also talking about, right now this is our covered call trade for Apple. And so we're talking about, maybe letting you set some different criteria. So, the strike prices and times might slide around a little bit based on your criteria if you were interested in that. All right, let's see. All right, Kavork has a question about, he wanted to know if there were slides or something else about rolling those options over. I've talked about that at some length in a previous workshop. I'll see if I can find that and link it to the blog post when we post the recording of this presentation, which will be probably tomorrow. And as always, we'll send out an email letting you know that that's up there. Yeah, all of our webinars are recorded and saved. You can find them if you go to the news section of the website. They show up in the featured section. And then, we need to put together something. We have them all categorized in a way that shouldn't be too hard to find, but unfortunately are currently not super easy to find. But we need to work on that, try to put together a library or something of those. All right, more questions. Yeah, while I'm waiting to see if there are more questions, our next workshop will be, it looks like Wednesday, January the 29th. We'll send out invitations a couple days ahead of time. If you have questions between now and then, you can always hit the help button here. We reply to most of those within 24 hours. You can also call us. Our phone number is in the footer down here. We're here from 8 to 5 Eastern time. So yeah, you can do that. You can call and talk to a real person. On the phone, there's no phone tree or anything. You usually get right through to whoever's answering the phone at the day. All right, well, I don't see more questions coming in, so unless some come in here in a second, I'm going to go ahead and sign off. Thank you for coming. Thank you for subscribing to Investors Observer. We're excited about 2020. We got a lot of big things planned. We redesigned the website October of last year. And it was a little bit bumpy, but we feel like we have a platform we can build some really cool new stuff on, and we're excited to show it to you. So, until January 29th, I'm going to go ahead and sign off. But if you have questions between now and then, go ahead and get in touch with us, and we will answer them. Thank you.